Hello, I'm Paul here. So yesterday I went over a formula with crypto, and it's over the 995 moving average strategy with the linear line regression strategy. And went over it with crypto. We went over it with Bitcoin and Ethereum, and today we're going to be looking at the stock market using the same strategy. I may have talked about this in some kind of way in previous videos, but I'm going to kind of elaborate on it more. This is kind of now this will only really work on longer time frames. So if you use this strategy, it's not intraday. The strategy will not really work that well. I mean, it still could work, but it won't work that well for intraday. It's more for those that want to trade on the hour and that want to hold longer contracts. So this will work for those that want to find moments when a stock is going up, and if you want to hold a trade for longer than like a day. It still work, but it won't be, this is not an intraday strategy. So we're going to focus on the hour, and we're going to look at a couple stocks, and we're going to see how much you could potentially make by applying these two indicators. Okay, so the first thing you really need for this strategy here is you need to set up your you need to set up your 90, 95, and now I do it with Ghost Market Pro. It's a paid indicator, but for everybody else, you'll need to input two indicators here. You need to go to CM, EMA trend bars, and you're going to input the settings 90, 95. What this will do it'll basically give you color-coded. It's basically a color-coded, and it's the 9095 basically is a big level of support where it will either bounce from or go down from. So it's a major level of when you find yourself entering at this level, you'll find a lot of volatility at this level because it's either going to push through or push down. So that's the importance of the 9095, because it shows you a big level of support. And then the next thing you want to get is your linear line regression. So you go to your indicators, you go to linear regression by UGURVU, and you plug that in. Once you have that there, you want to hide your candles. So once you have these two, you're basically set up. Yeah, you basically, these are the two main indicators. And what you want to do is you want to focus on a longer time frame. So real quickly, I'm going to show you how effective this is, but first I want to show you how to do this on a longer time frame. So we're going to be focusing on the hour first. We're going to look at the S&P 500, and we want to first identify the direction, really. So we want to go to the highest time frame. We want to look at this on the day. We want to look at this on the day. We want to see what the 9095 is doing on the day. And we could tell from this point on, right here, we are in a bullish trend. So bullish is really the trend that you need to be focusing on. So we're in a bullish trend with a couple pullbacks here and there. So that the direction we should be focusing on is, if we look on the day, we are bullish because it has crossed here. So I'm going to come back to the day in a bit here, but first we want to go back to the hour. So we know that the direction is going up. So what you want to look for is moments of it going up. So you want to look for two things. You want to look for the pivot line, which the pivot line is part of the linear line regression of the linear candles. So you want to pay attention to what that linear line is doing, and most of the time, if you're going in direction of what it is on a longer time frame, you're usually finding yourself with the best trades. So what do you want to focus on? You want to wait for the signal line to cross the 9095 for the best results. So like we see it happen, and since we know the direction is going in an uptrend, up is the direction we want to be focusing on. So we see we see it crossing here, so we could have entered at this moment with SPY, and we could have rode it out until we could have rode it out until it touched, turned into a red candle and touched the plot line here, and this would have resulted in a $10 move. So what you want to really wait for is you want to enter when the signal line is crossing, and you want to exit when it turns into, if you're going in a bullish trend, you want to wait for it to turn into a red candle and touch the linear line. If you're in a bearish situation, you want to wait, and you want to wait for a cross down with the 90.95, and you want to wait for a green candle to touch the linear line, or you could take profits along the way. But we'll see that the next move was, we waited for the candle to come back through the linear line, and we could have entered here as well. And we could have entered at this point, and we could have profited on about $828. So what you look for basically is a cross with the signal line, and let's just go to the last cross where it went up, which was right here. So this is a long one. We'll go over a couple of them here. We see that across here, this would have been a moment right here to get in for a trade. If you got into this one, and if you rode it out until it turned into a red candle, which is up here. This was almost a 6-day move, and you would have made about $2,000. But you could have took profit anytime you want up here. But the next move would have been when the green candle comes back through the linear line. So you would have had a small one right here. Turns green up until about this point. You could have got out right about here. This is about $700. And then you see another moment, it comes down, the green candle comes back through the linear line, and you could have profited right here. And you could, this one was a big one. This was $1,682 in a day and a half. So then it comes back down. This is going against the trend. You want to go with the trend, and we know the trend is going up. So we go right here. We start because the candle goes right back through the signal line. We could have took this profit here, which would have been about $1,000. Comes back down, pushes back through the signal line here. You could have rode this entire thing out. For a day, you have about $2,000, and if you go all the way here to the top, this is about $2,212. Comes back down, and the green candle goes back through the signal line. You could have come in here, rode this out, and this could have been about $750. It comes back down. It comes back down against the trend for a retracement. Comes back up through it again, and you could have entered right here, and you could have made about, this was a $1,255 move in one day. And then you have it happen again here, comes back down, comes back up through the signal line here, and you ride it out for here. This is about $1,000. You see it come down, you come back up through the green, the signal line here, and then you ride this out. It's about $841 there. And that's kind of how you do it here. You identify the overall direction, and then you focus on that direction, and then you look at the signal line to see if it's crossing. You look at to see if the signal is crossing, and if it's crossing, you can get in that moment. But if you miss it, you have to wait for a bullish trend. You have to wait for the green candle to come pass back up through the signal line again. So you always have to go with the direction. Now, real quickly, let me just show you why I don't recommend doing this on intraday level and the smaller time frames. You could probably get away with it, but we know the trend's going up, and you could have come in here. This one would have brief one. This would have been about $500. This one right here would have been $430. And you got the moment that it crossed, which is right about here. Now you could have wrote it out from the moment of cross, and this one's about 900. But there's situations here where when it starts going sideways, you'll end up, if it's in this kind of a volatile moment, you're going to find moments like this where it's going up, going down, going up, and this will lead into a lot of bad trades if you go to a smaller time frame. This is meant for longer time frames. So that's why the one I focus on is the hour. First, identify the overall direction on the day. Identify the overall direction either on the day or like the 6 hour, one of those. Get a good general idea of where the market is going. Look at your 90, 95 and see what the direction is. And then focus that direction on the hour. So real quickly, let's just look at another stock. Let's just real quickly look at, let's just do MicroStrategy. And we're first going to identify the direction by looking at the day. And we can quickly identify that the direction is going up. So up is the direction we want to focus on. If we look at the 6 hour, up is the direction that it's going. So now what we're doing is we're going to focus on the hour. And what we want to wait for is that signal line from the linear regression to cross the 90-95. If we miss it, then we want to wait for a pullback. We want to wait for a pullback, and we want to wait for the candle to come back up through the linear line. So let's see if we can find any of those moments. There's a moment right here where we see it crossing. Could have got in at this moment right here, very briefly. Could have rode this out for a couple hours and made about $1,000 right there. And let's see, we got another moment. Let's just start from the moment where it crossed. We'll go through this. We see it cross here, so this is your moment to get in. So you could have got in. Right here. Well, actually, now this strategy, particularly for MicroStrategy, this will work both for options, but option is pretty expensive. But if you can't afford options, what you can use this strategy for is find all the moments where it's starting to go back up, and enter positions when it started to go back up, and really multiply your percentage on this level. So you can use this for both options and to find moments where it start going back up. So let's just measure these ones right here. So we see it going up. You could have entered here, could have rode this one out until it touched the linear line right here. This is about a $3,000 move in 3 days. And then you have it cross back up right about here. So you could have rode this out. This is about a $4,000 move in 1 day. And then it crosses back up through here. This is a $2,647 move. And then you got another moment right about here. Crosses back up. Could have rode this out for almost 3 days and made about $4,363. So anyway, what you want to do to make this effective here, you want to set up your 90, 95, because that is a major level of support. You want to look on a longer time frame. You want to get your idea of what the overall direction is, and then you want to focus on that direction. So you then want to go to your hour chart, and you want to find where the signal line is either crossing or the candle is coming back up through that signal line. So if you miss the cross, your next point of entry is when it crosses back up through that signal line, whether it goes in a uptrend or whether it goes into a downtrend. So anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.